Hello, everyone. Welcome to the webinar today, delivering a wide range of commercial services. I'm Peter Towers, Managing Director of ESS BIZTOOLS. I'm joined today by Amanda Gascoigne. How are you, Amanda?
Good, thanks, Peter. How are you?
Good, good. Our
That's
apologies for our delayed start. So I hope that you're well wherever you are. If you're watching this presentation on the Facebook, LinkedIn, or YouTube, unfortunately, you can't send us an email or can't send us a message during the webinar. If you have any questions, can you please send me an email and we will get back to you after the webinar. So the email address is peter@essbiztools.com.au. Amanda is the principal of Amanda Gascoigne Consulting, and you're a very experienced chartered accountant. Amanda, do you just want to give us a bit of a brief overview of your interaction, your services that you have with accountants who are serving the public?
Sure, Peter. Yeah, as you said, I'm a chartered accountant. I'm a fellow of CAANZ. I had my own practice. I started that in 99. So I had my own CA practice for 18 years. I sold part of that to my brother, and then I ended up selling the whole lot to him in 2017 to allow me to focus on sharing, my skills and expertise with other small and solo accounting practice owners that may be struggling, and helping them have a better practice and a better life. So the way that I do that, that's my own, all the work that I do these days. So I help small and solo accounting practices all over Australia and New Zealand with one-on-one coaching, group coaching, courses, resources, and I have a fabulous community called the Balance Firm. So a whole gambit of things that I do to help small and solo practices from start up to about 1.5 mil in turnover, and it's a lot of fun. And we do all the work, mainly everything's on Zoom, which is wonderful. So I can deliver the training and the resources and the support from anywhere, and my clients can be anywhere as well.
Yeah, that's great, isn't it? All these new technologies and communications devices are a great assistance, aren't they?
Yeah, they are. Blessing of COVID.
Sorry?
A blessing of COVID.
Oh, yeah, blessing of COVID. Yeah. Okay, well, thanks very much for sharing those words with us, Amanda. We're just going to get started, and then, but if you've got some comments to make as we're going through, please do so. So it's
interactive. I love some
interactive.
Chat. I'd love some comments in the chat.
Yeah.
As we talk, whether you agree, disagree, whether you'd love to do some of the things that we're suggesting and just don't know where to start, pop it in the chat, and I'm happy to answer those questions.
And if you're watching this at a later time, which suits you, someone told me once they watched these at 3 a.m. Well, I don't think we want to be contacted at 3 a.m. Thanks, unless you're watching Australia win some soccer matches in the World Cup at that time. But because I'll be up then. If you have any questions later on, please send an email. And at the end of this webinar, Amanda will give her email address. And
absolutely. I'll pop it. I'm going to even pop it in the chat while we're talking.
Okay, that's great.
It makes it easier, and the websites.
You can make contact with us so we can give you some feedback, because that's what this is all about. I'm just going to take the screen back now.
Yes, and you want to share your screen?
And I'm going to share, and we're going to move in. We told you who we are. Let's look at this. I think accounting's at the start of a new era. I'm excited. I've been around this game for a long time. I've got to admit that I was there 40 years ago when the Financial Management Research Centre got started at the University of New England in Armidale. Now, the purpose of the founder, which was Dr. Jeff Meredith and Andrew Geddes and Sam Beasley, was to encourage accountants to provide a broader range of commercial services. This is 40 years ago, Amanda.
Yeah, I know. And I actually was a subscriber to FMRC, and I actually was. So the stuff that we're going to talk about today is certainly things that I did in my practice. So I used it. FMRC was a wonderful resource for us.
Yes. Now, some accountants implemented what people like Andrew Geddes were suggesting we do or did uh, 35, 40 years ago. But unfortunately, we really didn't have the technology then, and we definitely did not have the communications technology. But the software and technology was, I've already said that, was not fully conducive. Today, there is software and communications. We're using one of them today, aren't we, in Zoom,
Yeah,
which
absolutely.
has significantly improved the position. And then along comes the tax commissioner. Now, the tax commissioner is a former partner in a Big Four firm, KPMG, and he's issued some fairly strong warnings to the accounting profession, or a segment of the accounting profession at the very least, over the last couple of months.
Yeah.
And he's basically said that if you're preparing tax returns, particularly low margin, simple tax returns, there are some problems emerging. And this is exactly what he said. You must understand that if your business model is high volume, low margin, simple tax returns, your business will not be viable in 3 to 5 years. Now, Amanda, one person has contacted me direct about that when I repeated it and said, that's not right, and it's not what the commissioner said, and it won't happen, and things like this.
Yeah.
Well, I've been around this profession for a long time, and for those who are younger than me, haven't been around as long, I can assure you that over the years, everything that a tax commissioner has said has ultimately been implemented when it comes to the changes in how tax return lodgement and or preparation, lodgement and processing have occurred. So if Mr. Jordan's saying this is going to happen, I think it will. And we know from America that this trend is well underway.
It's the digitization in a lot of countries. It is definitely something that's happening. And I was actually there at XeroCon when the commissioner actually said those words. So things that I've been talking about for quite a while, because we know the stats, we know what's actually happening. So I've been talking about this for quite some time. I do work with the ATO and CAA-NZ, and we know this is coming. It's not a surprise. But I guess hearing that directly from the commissioner, squashes the idea that these are all rumours. This is something that's happening, and we see it in the stats. More and more people every year are lodging quicker. So that first couple of weeks of July and that first, July, August, they're lodging quicker and they're doing it through their MyGov account. We have the stats to prove that. Yeah. So it is happening. People are becoming, they want that refund as quick as possible. And realistically, for agents, when you're doing that, we can't do it early because we can't, do a tax return without all the information there. And it's not going to be at the portal in the first couple of days, but people are just wanting to lodge. So I think it's definitely going to happen. And I think look at it as a positive, like you said, like some of these changes, whilst people initially might be a bit scared by them or don't want them to happen, I actually think it also does give us the biggest opportunities.
That's right, Amanda. And that's why I've called this the start of a new era. I think it's a great era. I think we all should be very excited about it.
Yeah.
The commissioner also made these other comments: diversify to remain viable for the longer term. And focus on becoming a brilliant and trusted advisor. And that's the comment from the commissioner that I would really like to make as our ongoing theme for today's discussion with you. How will you become a brilliant and trusted advisor? I think he's speaking like a partner in an accounting firm, trying to encourage the accounting team to get out and do something new. So
to think bigger, Peter, and also to think maybe a little bit more commercially, because this is the thing with our low, high volume, low returns, it does impact profitability. Okay, I see that. I had a practice where I did have income tax returns, and I was able to meld them very successfully with small business and advisory. But there is a fine line. We need to be pricing those things correctly. And I think I know a lot of the prices a lot of people are charging for standard I returns, and there really is not enough money in them at that price point. So the way that I did it, I was never in competition with the ITPs and the H&R Block. I acknowledged there was a segment of the market that was theirs, and I deliberately didn't go after that market. And I went through, so my standard return back in those days, so it's 2016, was about $180 plus GST. So I could make money. And then on top of that, 130 for a rental property. I could make good money out of that. But I think people are not making the money. And I think, he is thinking like a very commercial partner of a larger accounting firm. And I think this hopefully gives everyone inspiration to be thinking the same. It's certainly something I teach and recommend to the clients that I talk to and people in my community. So yeah, let's look at how we can do just that.
Yeah, very good. Very well said. Thanks, Amanda. Okay, so let's move on. Start of a new era. In the USA, similar things are happening over the last 2 years. A number of firms have created this concept of virtual CFO services. And those of you who have been watching some of the videos that ESS BIZTOOLS produce will know that we've been promoting very heavily Summit CPA because they linked up with Plan Guru, the software package producer for three-way financial forecasts that we utilize. And we've had Adam Hale, the principal of that accounting firm, speak to us in a couple of webinar presentations. If you would like to watch those, you can obtain them on the ESS BIZTOOLS website under Accountants Minute webinars. And one of the reasons they went down this path was trying to overcome the spare capacity that they were starting to find that they had. They were worried about losing very top talent because they still needed them for a significant part of the tax work. Those people wanted to stay with that accounting firm. So they then started looking for additional services they could provide. So really accidentally, they got onto this new way of thinking of supplying services. And the big surprise they got was that the SME clients welcomed them. They were looking for new services. I think the same thing is going to occur in Australia, and for some firms has already occurred. They're finding clients do want more information to help them grow their businesses.
Well, grow and survive, Peter. It's grow and survive in this economic climate. So it's, it's about growing and surviving. And I think, one of the biggest barriers to small and medium-sized practices offering these is obviously having capacity. But secondly, the mindset that clients won't pay for this stuff because they're already whinging and carrying on about how much their tax, how much their financial statements are. But it is a completely different service. And I think, those that are game enough to try their hand in this, they'll be really rewarded because clients are actually happy to pay for this stuff. And even if they only, they're a little bit happy, by the time we deliver the results, they are ecstatic and they want more and more. And I can talk about that from experience.
Yes.
Yeah.
And the point I would say to just emphasize that, Amanda, is there is really no appreciation for a tax return from the client's point of view. No. They know they've got to get it done. They know it's going to cost them money, but there is real appreciation in the client for business plans, budgets, cash flows, financial projections, an analysis of key performance indicators, helping them run a better business, helping them achieve their goals, their dreams, their aspirations, whatever you want to call them.
Yeah. And it goes back to what the commissioner said. Sorry, Peter, it goes back to what the commissioner said is that they want more trusted advisors. So we really can step into this space by doing this. So, there perhaps is going to be a market for people who just want to do that churning out of returns and that sort of thing. But I think if you want to really reposition yourself as that trusted advisor, as, a real professional that can really get into the nitty-gritty, which is what I believe most of us go into doing. That's why we want to start. We want to help people more. We don't just want to get a tax return done. So sometimes that's just how our business has grown. But really, we went into business to help people, and we can help people by doing these services. So I think it goes back to thinking about how much of a trusted advisor you want to be and how we can actually use more services to deliver that to our clients. And that's the mindset. So it might be yes, we've got to progressively get rid of some of these smaller returns, and that's going to happen naturally anyhow. But do we need to make a conscious decision well before the time that it's maybe enforced on us, to then start gradually moving into the space of being that trusted advisor, doing more of these services? And some of these services, which we'll talk about a little bit later, could even just be an hour's worth of work, or a small mini service like $500 or $1,000. So it doesn't have to be huge. You can start and dip your toes in the water. And this is what I'm encouraging practice owners to do. You don't need to do it all straight away. Just make a start and do some things that you really get confident with, that you know your clients need, and then everything else can build on that. But think about being that trusted advisor. Think about what the commissioner said, and think about why you went into practice for yourself.
Yes, thanks, Amanda. Yeah, and that's very important, that whole trusted advisor. So let's move on, and we've talked about that. So many firms started to look at outsourcing of work to overseas firms, and this is what's currently happening. Of course, there's a lot of outsourcing. I'm hearing there's some supply issues with outsourcing at present, but we're not here to really go into that today. But that is one way you can overcome some of your work problems if you wish. There's some very well established and ethical outsourcing organisations based in servicing the Australian accounting industry.
Yeah, absolutely. It can be a really viable part of someone's model.
That's right. So ESS BIZTOOLS has developed a range of product packages which will help you to start offering these advanced services. We're not expecting you to go back and develop your own. You can if you wish, but you better have a few 100 hours spare, I think, to get into it. So let's go back to the very beginning, at the accounting at the start of the new era. 40 years ago, we were edging closer to accountants to supplying, or 40 years on, sorry, I meant to say, but we're not there. We're not there yet. The decision that firms have to make is whether you wish to diversify your product offerings to meet the marketplace conditions. Now, some firms may decide to go into financial planning in a bigger way, as long as you get the appropriate registrations. That could be a great area. Or you may decide you're going to try to do more audit work. But really today's discussion is if you are interested in offering business advisory services, a broader range of professional services to help your client. So we've already introduced you to Amanda. I lost you there then. So Amanda, I did have a couple of questions, I think.
Yeah, sure.
In your experience, how are these issues affecting smaller accounting firms and sole traders? You've already indicated to us that your group within the Balance firm, most of them are smaller practitioners.
Small to medium-sized practitioners,
And I suspect that smaller practitioners in the main were the ones the commissioner was addressing his comments to, but he's also conscious, or some of our accounting firms are conscious, that as some of those firms try now to reposition themselves more into the SME market, it's going to create some more competition. But I think there's plenty of market opportunities there at present. What do you think, Amanda?
Absolutely. I've always said, and I said it when I was in practice, and I remember actually maybe it was about 2001, I went to the Business Enterprise Centre, and I went to do, I was in a incubator sort of thing for growing businesses. And I remember a question was, who are your competitors? And I remember, I've actually got the folder at home. I must go and get it out, but and have a look at it. But I said I didn't think there was any competitors, because I don't think anyone was doing business the way I was doing it, right? There was plenty of people to do tax returns, but the way our model, our culture and all that, we were differentiating ourselves even back then. So I knew that, I only needed so many clients to be able to produce the income that I required to pay me a really good wage, to pay my staff, and to do all those things. So I didn't think there was any, competition like we look at, and there was, probably about 40 accounting firms if you want to look at it and see it like that. But my mindset was that I didn't think anyone was working in the space that I was. Right. So I think the same goes true now. We've got so many people that have different niches. Some people are working from home, and having their practice working from home. So they might do a lot of their stuff online. So we've got such a huge opportunity to actually position ourselves and do whatever we want. And really, the world is your oyster. My point there is you don't need that many clients to make a really good living. I think we're spreading ourselves too thin with too many clients, and that's the problem from small and solo accounting practice owners. So from that, if you think an average fee, and this is not a big fee, but let's say you think about an average fee of, say, $3,000 for a SME, a business client. That's, a set of financials and maybe 4 BASs. That's a set of financials and maybe tax planning, or a set of financials and, a business plan, or something like that. It's not a lot of actual money. But if you say, I want a turnover of 500,000 or 300,000, make those numbers, divide, the fee into that number, you go to say you don't need that many clients. So I think there's a huge opportunity to be agile, to say, and look at your client base and say, okay, well, how many individual people do I have straight out ITRs, and what amount of money is that bringing to me? And then what have I got in my SME space? And just seeing where you're actually sitting. Because I think once people crunch those numbers and see where they're sitting, it makes this decision to move more into advice. You say, well, this makes sense, because if I could have another $3,000 client, I could actually get rid of maybe 15, maybe 20. And then you think about, you're going to be able to produce that and get that $3,000 a lot quicker and a lot easier, because you've now got maybe 10, 14 less clients that you're answering emails, that you're doing all these things. Because this work, whilst we think it's profitable, it often isn't. So I think, all of it, that they're the problems that I'm seeing in a lot of, small to medium-sized practices, but it actually can be easily solved in looking at clients. There's other things that obviously come into that, but from a client perspective and a client, mix, it actually, and a product mix, it actually can start to really smooth out and get you back to that practice that you wanted when you started out, and being that trusted advisor. So, it might not be a popular thing. I think that's probably one thing Peter may be talking about. Maybe that's not popular, because some of these people that we do have to move on, they might be our friends. Their kids might play soccer with our kids. They might be at our school. But we could use that message from the commissioner to say, look, I really like you as a person. I really like you as a client. But unfortunately, we have to now reset our practice model in line with what we've heard from the Deputy Commissioner of the ATO. So, someone that we can trust. Hopefully everyone's of that opinion. So we can actually use it as an excuse. We don't have to now feel bad. We can say, look, we're commercial. This is why we're doing this. Doesn't that make sense? So we've got an excuse now, because we can actually move these people on progressively and then start to sell these additional services to our SME base, which really need us. And the other thing is we are limited for time. And now, because of COVID and extra pressure, those SME clients and the extra work they need us to do, even not advisory, just the compliance, we can't be everywhere and we can't service everyone. So we've got so many things at play, which, like, I like to think it's a problem, but it's actually an enormous opportunity. And I love a challenge. And I think it's great. I think we've got to look at the positive.
That's right. Okay, well, thank you. And
so I think that's what I'm seeing. So yeah. I'd love if anyone, if that's not what's happening in your practice, but I think most people will be able to resonate with that, Peter.
That's right. And in our final webinar in this series, which is on next Wednesday, next week, on the 30th of November, Andrew Geddes, who was one of the joint founders of Financial Management Research Centre 40 years ago, is going to talk about how you might restructure your practice. And he's also going to emphasize what Amanda just said. You don't need a lot of clients to offer these types of services. Okay, let's move on. I want you to think about. Someone rang me the other day and said, "Paint me the picture. What should services should I be offering? I've been reading your stuff, but give it to me. So I sat down and did something like what I'm now going to take you through. I said, think about a larger business. And he said, well, I've never worked in a larger business. I said to him, well, I have. I was the CFO and company secretary of a listed company that had operations in 3 states. We were in the meat industry. So we had hundreds of small outfits. We had 4 very large meatworks and butcher shops and delicatessens and cold stores and in 3 states. So I went through that with him and explained it. So I want to share this with you because I think this is how a large business works. Now, in your mind, I think you should be thinking about, if you know a business or even a client, but a business that's got a turnover 25 million, around 50 million, that's probably the comparable back to for you to think about. Because if someone's got a turnover of 25, 50, 70 million, they're going to have most of what I'm going to talk about now in place. And basically all we're talking about is you offering a part-time service because that business is not going to be big enough to justify the employment of a full-time accountant or chief financial officer, whatever title we want to give them. So a larger business has a chief financial officer. In many cases, that person's also the company secretary. That's what I was. But they segregate their business into smaller business units, which a lot of people don't appreciate. In a Woolworths store, both of my children, when they were going to uni, worked at a Woolworths store. And I got to know the guy, I think he was called the general manager of that store. He had 45 separate business operations in that store. Do you know that by Monday at about 3 o'clock of an afternoon, he had the trading results for the previous week? He knew what the profitability was in the butcher shop, what it was in the delicatessen, what it was in the fish area, and so on. He knew the gross profit percentage, the labor to turnover, and all sorts of percentages. How do you think he was able to run his business unit as the general manager, talking to the manager of those particular businesses? I think they were well prepared compared to someone outside in that shopping center that was running an independent butcher shop or a delicatessen or whatever. Did they know how they'd gone last week? They probably knew their turnover and nothing else. And that's the comparison. I think big business, when I got involved in a large business, I realized that they had run themselves like a series of small businesses. And yet we forget that as advisors to small businesses. We haven't looked enough at what the larger companies are doing. So what does that CFO do? We develop systems manuals, exactly what I think you should be doing with your clients. They understand the business of the business. I joined the meat industry and about all I knew about it was what a rump steak looked like, or tasted, probably more tasted if someone else had cooked it, unless I had a barbecue nearby. But I had to get out onto meatworks and boning rooms and retail shops and learn how the industry ran. And I found some amazing things that my predecessors may have missed. But you need to understand your client's business, and this goes way deeper than the knowledge you probably have now to prepare an annual set of accounts and a tax return, because there's more to it. You need to check whether there's any potential problem areas, risk areas. Risk management comes into play. And also, don't forget, internal control is very important. We are accountants.
On that point, Peter, I think one of the things that I know that I did as a practice owner, and even before that, when I worked for someone else, was I used to go out and visit the client at their premises.
Very important.
I think I think we've lost a lot of that, and it's because we're, push for time, all of those things, push for time, trying to make budget on this job. But really, I would be inclined to say that's part of the service. And if you wanted to really position yourself as being that trusted advisor, getting out there, you just learn so much by going and seeing what's happening, actually meeting the person that you might be, sending the information to you, that you actually meet the person in the office, you meet someone else doing this. And it's actually quite often you'll walk away from that appointment. The client will be so happy that you've spent the time to go there and see them. often walk away with more work. Oh, I can send one of my staff members to go and help with that MYB or zero issue. We can sort that out in a jiffy. It'll just be a couple of hours and we can do the training here. Oh, you do that here? Yeah. Or whatever. Like, I know that's not for everyone, especially if you've got an online practice, but when you have it and you want to get into the community, we and our clients, and we do as well, thrive on, human connection. And with so much stuff on Zoom, which I definitely love Zoom, but there's nothing like going out there. So it might just be once a year you go out to present the financials, or just to, even if you just want to pop in and say hello. I used to do that at Christmas, just go out and deliver the Christmas gifts. Like, I wasn't there, but 10 minutes just to say hello, and because you're in a hurry, just have to say hello and keep going. But clients love that stuff. And I think we've forgotten about some of those things, or for many of the practice owners here, they've never been experienced or experience that, because where they've come from, they may not have done it. So this is something different. And, I think it's something really worthwhile when you want to get to the nitty gritty of the business.
Yes, Amanda, I'm glad you brought that up, because that's very, very important. In fact, when I got out of accounting and took on consulting, we had a farewell party in my office, and a client that I'd had for 16 years made his first appearance in the office. Yet I'd had meetings with that man every 2 weeks for 16 years.
Yeah.
Now, he was a big business, but I met him all the time in his office, in his boardroom.
Yeah. So you've got to be mindful about this stuff with the profitability. But if you're charging out at $250, $300 an hour, and you're adding an extra hour or two to that annual fee that you're going to be charging, you're going to get your money back anyhow. But it's really, I see that as PR. And that was, to me, even if I didn't get a recovery on that money, I would rather do that than pay advertising, marketing, trying to get more new clients, which I think a lot of people fall into that trap. It's, it might be a bit more romantic when you hear about, we can get you more clients and more leads and all that. We've got so many hot leads in front of us that we can be nurturing. Right. And that's, of course, then when you start sending, your flyers or your emails about, we can offer this service and we can offer that, you've probably already talked about it. And even just casually in those conversations, when they get that flyer or that email, oh yeah, I remember Amanda's talked about that. Yep, sign me up. And I just think it helps sell these advisory services, because they feel like it's not just going to be a flick of a button, which it never is, but they think that, but it's actually that human element.
That's right, Amanda. And just another issue on that. I've got cited at various clients' office over the years by other business people.
Yeah.
They say, "What are you doing here?" "Oh, I'm doing Graham's whatever, or Bill's whatever." Yeah. And I got clients out of it.
Yeah, that's right.
It was amazing, because the particular guy I'm talking about, 16 years, never been in my office, was a real business leader in the community. So people will say, "Geez, if he gets you to do his work, I'll get you to do mine as well." So it was quite interesting.
Yeah, and a flow-on effect of that, Peter, is also when you're not in the office. So if you haven't got an office and you've got staff there, or even if you're working with a virtual team, the fact that you're not there to answer every question every 5 minutes, it actually empowers your team to start taking more responsibility, to making some calls on themselves, to maybe do a bit more research, and they'll actually become, they'll be a little more resourceful because you're not there. So I'd like you to think about that as well.
Very good point. It's part of delegation, isn't it? Maybe inverted delegation, but it works.
It works. So it's these are all the different things that I think we've lost a lot of, Peter. And from all of those things that I've also talked about, when you're out with a client, you actually get more confident. I think we've actually, whether we're sitting behind a desk and sort of hiding behind the desk in some respects, when you get out there talking to people, you come alive, and you get more confidence that, I can do that, and I think it's amazing what those interactions can do.
Yes. And I think accountants' offices intimidate some clients. They're worried about parking meters outside. They're worried about what's going on back at the workshop or the office or the farm or whatever. If you're out there with them, I think they relax a bit more. And it's a bit like the relationship that I'm getting at in our discussion today. It's what happens in larger businesses. If you're the CFO and you're dealing with the CEO, it's a one-on-one. You're together. You're walking around, having a look at things. But it's all part of the journey for those of you who are embarking on this for the first time.
Yeah.
I've got here leadership teams. The CEO would be talking to the leadership teams. Business plans are very important and be part of your responsibility to develop. But you should never prepare a business plan without having client input. I've known people to do that. I did some work for an organization. I cannot say who it was, but it was an organization that was being funded by a government department. And they hired me to monitor the performance of a business that department or that organization had lent money to finance their business. So when I met the client, I said, "Have you got a business plan?" And she said, "Yes, one got done for me." I said, "Oh, yeah." And she said, "But I don't like it." I said, well, didn't you tell them what you wanted?" She said, "No one spoke to me. It just turned up in the mail." Now, please don't do business plans like that. Please don't. Business plans are meant to be personal documents for that client. You need to sit the client down. Time to a chair if you've got to, but you need them to sit there as you work through it. Within ESS BizTools, we have detailed questionnaires. There's about 40 of them in every aspect of a business. But sit down and discuss those questionnaires with the client and get their answers, get their aspirations. It's their business plan. Even though I want you to be the virtual CFO of that client, it's the client that's got to implement it, the client and their leadership team. So please think about that. I've talked about systems, manuals, business. We seem to be going the wrong way here. Just a minute. So the next thing that goes on in businesses is they know they need budgets, and so do your clients. You need to sit down and plan what's going to happen, and again, have them as part of the process. Or if you do it yourself on your computer, make sure they take more than 1 minute to go through it. They just don't look at the bottom line and say, that'll do. They need to understand how a budget's been put together, what assumptions that have been made in it, because very quickly they'll start saying, "Oh, that's not right." Or they might ring you the next morning and say, "Now, I've been thinking about that. I had a 3 a.m. wake up this morning, and I don't think you've used the right percentages in there. I won't get 95% productivity out of that team member. I'll be lucky if I get 60%. That's going to change a lot of the results that have come out, isn't it? The cash flow forecasts. The real reason you're doing that is to identify if there's going to be stock buildup at certain times of the year. If your client anticipates problems with supply chains because of what's happening around the world at present, and they need to increase their stock levels to counteract the supply chain issues, what's that going to do to their cash position? You need to have that calculation done so you can talk to your client, so you can try to make other arrangements. It might be to go off and talk to the bank. Then the security issue needs to be discussed. Or it might be that the client says, "Well, I've heard about crowdfunding or something like that. Can I try and raise some money?" Now, that's a whole exercise. We've got all that summarized in our programs, but you need to get the discussion going first, and that will come out of looking at the cash flows and the projected balance sheets. And this is the three-way financial forecasting models that banks now want loan applications submitted with. They want to see what the balance sheet looks like at the end. And tomorrow in our webinar at this same time, I have Paul Barnaby as our guest commentator. And Paul's a fellow of the Institute of Chartered Accountants, but for the last 25 years has concentrated on predictive accounting, budgets, cash flow forecasts, projected balance sheets. And he'll really highlight how important that projected balance sheet is. It shows the client what the result of their current activities is going to look like in 3, 4, 5 years' time. So it's very important.
And so, in addition to doing these reports with your clients, I'd encourage everyone to do them for yourselves as well. So, December, January, perfect time for you all to be spending some time doing exactly that, revising your budget, preparing it if you haven't already prepared it, getting it in your accounting software, and working out your KPIs. Can't stress that enough.
Yes, what exactly what you're doing for your clients, you should be doing for yourself.
And it's great because you can work out what the process is, how long it's going to take. So then if you're worried about, I don't want to do this because I don't know how to price it, I don't know how long it's going to take, use yourself as the guinea pig and, get that information.
Yes, right. Okay. I went the wrong way then. I'll just come back here. And so those financial forecasts, of course, go to the board of directors, and that could be the leadership team with your client. It might only just be the client and her husband or his wife. Weekly performance reports, I think, are a great concept that accountants should look at to introduce for your clients, because the big end of town definitely prepare weekly performance reports. In my company, we did profit and loss accounts on every operation we had, hundreds of them, and the key performance indicators were very important. Quite frankly, that's what the CEO ran the company on. He looked at the weekly results. We used to consolidate them for our various divisions around Australia. We had about 7 of those, and he would look at them. And at the end of the month, he used to say to me, do the monthlies support the weeklies? And I knew what he meant. And I'd say yes. And he said, okay. I don't think he read the monthly accounts half the time because he was worried about the weekly performance.
Yeah.
And more of our clients should be doing that.
I did this for a client of mine that they were, carrying on that, didn't have enough cash in the bank, didn't have this. So I actually created a 2-page document that I had everything that needed to be reviewed. And the admin officer would actually complete that every Friday and hand it over to the owner of the business to look at. So we had, what are the debtors balance? What were they last week? And then they had it in a very, they're busy, and 1 or 2 pages. So I actually created that for a client. And this is something you could do as well. And when you just, hey, it's a new year, here's this 1 page or 2 pages that you can actually create as a template. And then from that, you then say, look, this is something for you to monitor every week. If there's anything that looks a bit odd or you're a bit worried about, give us a call, because then we can look at maybe, meeting with them monthly or taking some corrective action or helping them. So it's actually awareness. And I don't think, yes, you can print out print out a report from the accounting software, but there's something about them pulling out those numbers on 1 page that you've not got to print a balance sheet and a P&L and a payroll summary and a debtors report and this, you've obviously printing them, but then you're just putting the number that matters for the owner of the business. And then, of course, if they want to have more detail, I'll go into that. But this is just such an easy thing, and it actually can create so much more work for you.
That's right.
Amazing.
And it's a very effective way of running businesses, I can assure you.
Yeah.
And that goes back to the example I gave of Woolworths or Coles or IGA. I've done work for a consultant that advises IGA stores, and they're all on this weekly reporting system. Monthly financial accounts should then be prepared for each of the business units that you've got, and you can then do the comparison of. So part of the report would also be that in a bigger company, the CFO prepares a report each month on the overall liquidity of the business. Things like Amanda just mentioned, debtors days outstanding, investment in inventory, and so on. How it varies, because every variation has probably got a reflection in the cash flow position. And the board of directors in these sort of companies meets monthly. Now, what I'm proposing is all of this is a structure that you can look at to implement for SME clients, from very small clients upwards. Get them into the habit right from the beginning. It's part of the cost, if you like, of going into a business, that you need to have these disciplines. And because the big end of town is doing it, and they've done it quite successfully. So I've now called this the modern SME. with today's technology and software, we can do this. We can adopt the big business model. And they will get more information. Some of your clients want to do this because they want to scale up. The American experience in the last 2 years has been that a lot of SMEs welcomed this with open arms and said to the accountants, thank goodness you finally come and talk to us about this. We need this. We want to grow. We were thinking of going to get someone else to do this work for us, an external business consultant, and just leave you with the tax return. You'll get all sorts of interesting responses, but you're going to have to raise the conversation though with the client.
And, you know, suggesting that weekly summary report or something like that. Why I like weekly, because I mean, of course, we do things monthly, we can do things monthly, but weekly means it's part of the admin person's job or the accounts person. It means that everything has to be up to date. So how many times maybe as a business owner jumped into an MYB Xero, QuickBooks file, and they've done a report, thinking, oh, everything looks pretty good. They're not checking whether it's been reconciled, whether everything's coded, all of that. So they might be making decisions based on incomplete information. So that's why having this, weekly summary that someone in that office has to produce, or maybe if clients don't have that person, maybe you offer to do a weekly tally up. But it means that stuff is getting done weekly, which then usually means it's getting done daily, and it's part of someone's job because we've got the technology to use, but we're often not using it to its, its most, most potential. So therefore, trying to see how we can get better quality information fed up to our business owners, and that all then has an enormous impact on us, because what we get to look at for monthly or quarterly accounts for BASs becomes better quality, because then they're saying, okay, can you help with this? We've got a HP, we've got something, how do I code this? And we're getting a lot of those queries and resolving them as we're going.
Good point. Let's bring this back up. Okay, so all of this, and the reason we've gone through and looked at this, and Amanda and I have made some comments, is we've been analysing what a CFO or a chief accountant does in a larger company. And it might only be a $25 to $50 million turnover company, but if they're going to survive, they need to have put that sort of infrastructure in place. Our honest suggestion is this is what you should be doing for your smaller clients. $500,000 turnover, $1 million, $2 million, obviously, and try to put as much of it as you can into even smaller clients. 150, 200,000. It's the principles that are put in place. It's like if you're teaching kids to play soccer. Well, you've got to, as Amanda mentioned soccer before, and I'm a soccer fanatic. One of the basic is you tell the kids they can't touch the ball with their hands unless they're the goalkeeper. And they it's funny watching 5 and 6 year olds play, because every so often some of them forget and they pick the ball up. They think they're at rugby and they're going to run with it. It's the same thing. If you get the clients that have got very small businesses, you can try to embed some of these principles and ideas that if they're going to run a business and be able to proudly say down at the golf club or the bowls club or wherever, I'm a businessman now, these are some of the disciplines that business people need to have built around them. So this has all led to the emergence of this virtual chief financial officer concept, a concept that wasn't really available 10, 15 years ago, but it is now because of the software and the communications that are now available. Now, there's plenty of other work that you can also do for your clients. And what I'm now going to run through is all included within the ESS BIZTOOLS packages. One of the obvious items, I think, is sales. None of us can run a business without there being some sort of sale. Now, how you do that sale is, we're going to present that in some further webinars in 2 weeks' time with Paul Barnaby, who's an expert in selling. But how can sales be increased, I think, is a legitimate question for you to be asked as an accountant holding yourself out as a business advisor. To help you within ESS BizTools, we have charge out rate calculators for tradies and professionals and manufacturing businesses. It's very similar approach. We have 3 separate packages, but they're very similar, which look at the combination of the amount of hours someone works, the rates of pay, the productivity percentage, the overheads of the business, the markup that the tradies putting on external purchases for clients. What's the targeted profit? And at the end of all that, we're going to be able to show you whether that client is going to achieve whatever the targeted profit is. Now, that tradie charge out rate calculator, I have a client within ESS BizTools, an accounting firm, just like the people watching this, who has 120 tradie clients. When he first started with us, he had about 30 tradie clients. He's now built it up to 120, primarily through referrals from tradies. They talk, they tell their mates. And he does their calculations at least once a year, sometimes redoes them because of changes. He then introduced them to the concept of a monthly business review meeting, just like the big companies do, and monthly or quarterly financial accounts. He is generating revenue of between $7,000 and $10,000 per client, 7,000 to 10,000 plus the tax return. So it's added on. Think about that. Over $1 million in fees through servicing the tradie market, no outlay for advertising or promotion because the marketplace did it for him. Every accountant that is listening to this webinar, I think, has got the opportunity for introducing that sort of service because you are helping your client to understand what their sales revenue is and how they can increase it and fine tune it. So please think about it. We got a similar product for retailers. Retailers and wholesalers are a bit more complicated because you've got various stock categories, some 30, 40, 50 of them, and they've all got different markups. And there's some very good stock to sell, but you can only, the market will only buy so much of it. That's that high markup area. But you've also normally got some very inferior stock, which the markups might only be 10, 20, 15%, 25%. You can't just have that in your store because you'll never generate enough gross profit to pay the overhead expenses and make a profit. Some clients really understand this, but I found some others who'd never been in retail before, but suddenly in retail have really got no idea. So it helps them to understand the sales mix that they need to try to understand. And it might be the store layout that's wrong. I've seen people with their star products all at the cash register. And in some cases that works with supermarkets to have things there for kids to grab, but that doesn't quite work in other situations. So you need to just sit down and analyze that. Risk management is a big area that we should be looking at. So it's something you could undertake. Research and development. I asked someone yesterday that I was doing a training session for brand new client for ESS BizTools. Everyone gets a training session. This person's in our advanced package, so he gets 4 hours of training. And I asked him about research and development, and he said, yeah, I had someone inquiring about that. And I said, what's the turnover? He said, oh, virtually none. So you need to realize that people doing research and development who want to make themselves able to obtain the government's research and development tax offset may have a very small turnover or none at all, but others may have a turnover of over $20 million. You just got to be aware and keep your eyes and ears open and ask questions of clients and put out newsletters to talk about things like research and development. And you might find some clients will, oh yeah, we've been doing that. We didn't think we could talk to you about that because of confidentiality reasons. Team training and mentoring is an area you could look at. Corporate governance. As clients grow, they need to know more about this concept of corporate governance. They need to have an appreciation of how they might react and what a company, if they were a company director, or what a company director does. You can help educate them on that. Grants. I'm amazed at the number of smaller accountants who seem to ignore government grants. They're one of the greatest sources of referrals that you will find, and the government pays half the cost. And there's a lot of the work, I find around 40% of the government grant money, an accounting firm that is switched on to offer business advisory services can in fact be the recipient of it, because there's work, business plans, budgets, cash flows that can be done. We've
And
talked
Peter,
about
the Queensland Government's Business Basics Grant opened, the registration of interest opened today at 9 a.m.
Yep.
and closes at on the 5th of December. So I'll just pop that link up in the notes if anyone is interested in, they have clients that meet the criteria that can get up to $5,000 for this very work. So if you are a practice and you need help, I'm available to, and so is Peter, to do some, if you wanted to get, up to $5,000 worth of assistance. But, more importantly, on the points that we're talking about today, if you have clients, all they need to do, if they meet the criteria, let's just get a registration, of interest, register your interest. And then if you're selected, then you have to go in and then put the form in of how you're going to use these funds and how it's going to improve and help the business. So there's 5 categories. I've just popped the post up there with the link, but otherwise just search Business Basics Grant Round 4 and all the information is there. So I'd encourage everyone to have a bit of a look at that. And this is the first foray into trying to get some more of this work if you're just starting out.
That's right. And there's a lot there, and we have a separate grant finding product. Of
course, but this is one that was pertinent for today. So yeah,
that's right.
Let's talk about it. I've been sharing it on my socials. So
Another big area that you can look at is funding. Now, when I started giving this sort of advice to clients quite a few years ago, Section 708 was just being introduced. Prior to that, it was very difficult to raise money legally for a small business. You basically could only raise money from your family because you couldn't talk to anyone else. 708 got brought in and it got changed a bit further on. Paul Keating brought it in. I must admit I don't praise Paul Keating for much, but I do for that. And John Howard then changed it when the Liberals come to power and he was the treasurer. Keating was the treasurer at the time when he brought it in. And it's been a very handy section. Clients can raise up to $2 million. One of the problems is the 50 shareholder limit can start playing a bit of havoc a bit further down the track if you're not careful. But now we've got crowdsourced funding equity raising. And after getting off to a bit of a shaky start, and 6 years after New Zealand, England, Canada and US had crowdsourced funding, we finally got it started. And now it's starting to process very well. Within ESS BIZTOOLS, we've got a very comprehensive product package to show you how that works. And you can be the key advisor to your clients. Clients might also be interested in their exit strategy, and you can also discuss other matters with them. So I've listed here in the material, what other skills do you need? What should you be thinking about? Now, some of these you've already got, so my apologies, but you need to have an inquiring mind. The American accountant that we've been talking to uses the terminology, which I've quoted quite a number of times since. 1 inch wide and a mile deep is what he believes you should know about your client. So you need to know a lot about and this is this business of business that I talked about at the very beginning. You need to develop that, and then you can become a very valuable person for your client. An SME needs analysis assists. We have that within ESS BIZTOOLS. It's basically a series of questions you can sit down and discuss with your client. You need to be a good team player. This is not a solo effort. You're working with your client's team. If you're not comfortable with that, well, this is probably not going to suit you. And Trevor Marchant was on a webinar with me yesterday and used made the comment that accountancy services have to be sold. They're not bought. You've got to promote what you can do to your client. Not many clients are going to come to you and buy, because why? They think you're not interested. They think you're too busy doing tax returns. And this is a real problem. I've had clients, accountants that I've mentored and said, okay, go out and put this onto your website and we'll start talking about products. One of them put an article I'd written for him on research and development onto his website, and said a client rang him and said, why are you promoting this? You won't do it. And he said, what do you mean? He said, you're too busy. You're too busy already.
Yeah.
And we had to get this through, that he was delegating in his firm, and he made some changes, and some of the wage earner tax returns had been encouraged to go to someone else down the road.
Yeah.
And he was now able to offer these services. So you need to remember that you've got to sell. You've got to be your own promoter, because we all have to sell. Every business person's got to sell. I'm trying to sell to you now. You can tell me later if you like whether it was effective. And Amanda's selling. We're all selling, and we've all got to be salespeople.
Part of being entrepreneurial and part of, being in business for yourself. It's not going to come at you, without this work.
Thanks. And we've got to be able to look at the new services and identify the key benefits for your clients. Look at them and say what you can offer them. I'm giving you an example of a tradie business. You've all got tradie clients. How do they work out their charge out rate? Start with that question. Are they copying what they hear someone talking about in the club or the pub? That might not be right. That might not suit their business. Their overheads might be completely different. And you need to understand that, which I find very interesting, but some people might be a bit nervous of, you're going to work with your client. Your client is presumably the CEO. So you need to develop that working together. And I'm sure you'll have some arguments at times. That's part of the course, unfortunately. It's a bit like playing golf, and it's a bit rough up ahead. On the golf course, it's a bit the same in this. It's not always going to be without some dramas. There'll be some disagreements. You've got to remember you're part of the team. At the end of the day, the CEO is the boss. It's the way I look at it. So Amanda, is there anything else that you would like to add to what we've talked about?
We've talked about a lot, but I really want the practice owners that are here today and watching maybe on replay to really think about, like what I said earlier, is think about why you started your practice. And if that was to help more businesses, help more people, like gain the financial freedom that you went into business for as well. Like, I think the thing is, we've got to be thinking that what we want for our business, our clients want as well. So how can we do it successfully for us and for them? And, that's, what do we need? We can't just rest on our laurels and just do things just because it's always been done that way. And especially if we've got, more complexity, we've got more competing pressures, it's an opportunity to really establish yourself, maybe that niche, or maybe doing something differently, or really cementing the relationships with the clients that you care about and the clients that you absolutely love working with. Right. So the ones that we don't necessarily enjoy working with, that we're not making as much money as we should be, or maybe even it's costing us money to service a certain element of clients in our base. Let's look at all this commercially and see how we want our 2023 to look like. Really getting back to the sweet spot that I talk about in all the work that I do, really reconnecting with your vision, having the right clients that's going to help you achieve that, having the right mix of services that are profitable, that you love delivering and you're good at. And because there might be some things that other people are doing, or you're doing even now, you don't even like doing it. Let's ditch those and let's get into your little menu of services, these fun things. So the charge out rate, a break-even analysis, a budget, a cash flow, business planning, tax planning, all these things are a lot of fun to deliver, and clients just absolutely love it. And then having the right culture, that you're actually getting your clients thinking differently. You're thinking differently from a mindset point of view. And when we've got staff members, Peter, this work that we're talking about, this advisory work that your clients love, your staff will love delivering it and helping you deliver it. So this is actually going to be more rewarding, more richer for them, because they're seeking more challenges, and they're seeking to do more than perhaps some of this mundane stuff. So you're actually ticking that box as well. And, you know, that retention piece that we talked about, or that you mentioned, and then having the right technology and the right, you know, resources to help you do this, like getting all those things in sync. That's when you find your sweet spot. So, you know, talking about an opportunity and being agile and a new year upon us, it's no better time to be looking at this stuff. And, you know, you've got plenty of support in Peter. You know, if you purchase the ESS BizTools, the amount of support that goes, you've heard him, you know, being mentoring some of the clients that, you know, that actually have this system. And there's people like me that actually have a whole community of people just like you that help actually, you know, encourage and empower you to do all this stuff. So, you know, you don't need to do this alone. So whether you're a sole practitioner with no team, but you've got a lovely lot of clients, this can be easily, you know, implemented into your practice. Likewise, if you've got a larger team, same thing, but just making sure that you've got the support and you've got the people that are, you know, like-minded people that you're surrounding yourself to help you actually get success and gain even more confidence in this stuff. That would be that's my advice. You know, it's you know, of course it's not easy, but you can make it easier on yourself because there is so much support out there. You don't need to reinvent the wheel.
Very well said, Amanda. Thank you. Okay, so special Black Friday offer. It's Black Friday tomorrow, and we have a special which we're running to get started within ESS BizTools. Not to do everything we've been talking about today, but to get started for a smaller practice, and you can upgrade at any time. Our package normally costs $2,100 on a cash upfront basis, including GST. We've got a 20% discount on, but we're going to give you access for 15 months for $1,680. It's the best deal I think you can get. And you get 2 holiday accommodation vouchers. Now, these are for 3 nights in Australia or overseas. You've got to get yourself there, of course, but we just allocate those while they last. We've got a quantity of them, but when they've gone, they're gone, and that deal will change. So that's the offer to get started in the starter package. We then have what we call the advanced package. Now, this is all of the material that ESS BizTools has produced. Everything we've discussed today is included, together with our government grant program. Normally that's $6,500, including GST. We take off the 20% discount, and for 15 months, it's going to cost $5,200. And if you subscribe on that basis, you'll get 4 holiday accommodation vouchers. So you can see all these by going to our website, www.essbiztools.com.au. And then we've got our largest package, which is the financial forecasting package. The upfront there is normally $9,900. After the 20% discount, it comes back to $7,920, and you get 4 holiday packages, and it's for 15 months. Now, it also comes though with the Plane Guru software. Plane Guru is the company we've linked up with, and the deal I negotiated with Plane Guru, normally an Australian subscriber to Plane Guru can only use it for 3 clients, the software, until they have to pay a monthly extra charge. We've negotiated with Plane Guru that you can have 10 of your clients on there for no extra charge. The extra charge, incidentally, is $29 per month per client. So that's that benefit is worth about 3,000 Australian dollars. So it's well worth looking at. Plus, you get training in how to use Plane Guru, delivered by our affiliate, who's well known to Amanda as well, Paul Barnaby, a fellow of the Institute of Chartered Accountants. And his company, Beyond Accounting Technologies, does the training and mentoring to get you used to using this software. And Paul Barnaby is fanatical about the benefits of predictive accounting for your clients, but also for you as the accountant delivering those services. So if you want to know more, please go to our website. And there's the address there, www.essbiztools.com.au. Or you can give me a phone call, 1-800-232-088, to set up a 15-minute, no obligation Zoom meeting where we'll go through very quickly your firm, your team, your clients, and I'll give you my thoughts on the types of business advisory services packages which will help you to be able to deliver value-adding services that you will get paid for by your clients. We also have a government grant program, which we've referred to a couple of times, that you can go on there and have a look. It's www.essbizgrants.com.au. Now, our contact details, I think we've told you all those, so they're there. And here's Amanda's contact details. Hope we got them right, Amanda.
Yeah, that's fine. That
0402805320. You can get Amanda or send her an email at amandagascoigne.com. And if you need to follow up with any questions.
Sure.
So thank you for being with us. Amanda, thank you for joining us today and giving us the benefit of your considerable experience first of all, as a practicing accountant, and then as a person that's consulting to hundreds of smaller accounting firms who are very important in this industry.
Absolutely.
And I hope today we've been able to inspire them that whilst they may have been disappointed when they heard what the tax commissioner had to say, or they may have been disappointed about just where things are generally going in the economy and everything else, everything changes ultimately. And I see that this is the dawning of a new era for accounting services in Australia.
Yeah, I think it's so much of an opportunity. And, I know that so many accountants have been helping their clients so much over the last, nearly 3 years now. And quite often they haven't put their prices up. They've been delivering even more and more value. And sometimes, sadly, their bottom line has diminished. So what they're getting paid, they're doing more and delivering more value, but getting paid less. So let 2023 be the year that you look after yourself. And I don't think your reasonable clients and your ideal clients will batter an eyelid should you need to increase your prices. I just received a thing in the mail today that Australia Post are putting up their prices. Everyone is. So, maybe it's not a CPI increase for you. Maybe it's more because you haven't actually been increasing your prices. So in addition to pricing, delivering more services, 2023 can be the new era for you, and, it's a new opportunity. So let's take it.
Thank you very much, Amanda. So just to finish, this series of webinars continues again tomorrow, whereby Paul Barnaby is joining me. And then next week, we have an in-depth view at the concept of utilising, I don't know where I'm going here, utilising the charge out rate calculator. We're going to talk in depth on Tuesday about capital raising, crowdsourced funding and early stage innovation companies. And then on Wednesday, the 30th of November, Andrew Geddes is joining me. And Andrew's going to try to bring together everything that our panel of experts have discussed with me in 6 of these webinars we will have presented by then, and try to give you an overview of really where accounting could go over the years to come, starting with 2023. So thank you very much for being with us. Thank you, Amanda, for your contributions. And I hope everyone has a great day. Thanks, Amanda.
Bye, everyone.
Bye-bye.
Okay, cancelling.
Yeah, I got to find the end now.